Good day, ladies and gentlemen, and welcome to the earnings call of Arabian Petroleum Limited. All participants are currently muted. We'll open the floor for questions after the presentation concludes. Please note that the conference is being recorded. We are joined today by Manan Mehta, Director of Arabian Petroleum Limited. I would like to invite Mr. Mehta to provide a brief presentation about the company. Thank you, and over to you, sir.
Thanks, Siddhi. Good evening, everyone. This is Manan Mehta, Director, Full-time Director of Arabian Petroleum Limited, and welcome to the earnings call. I will give you a short, brief presentation about what the company has done for the past 6 months and what looks, in the future. So let me just share my screen so that it's visible to you. What am I speaking about? So is the full screen visible, Siddhi?
Yes, sir.
Yeah. So basically, some key facts and figures about the company. We are a 250 plus employee strength, 300 plus distributors worldwide, 25 plus countries where we have our presence, and 500 plus different types of product range that we in-house produce in Arabian Petroleum Limited. So last 6 months, revenue from operations was at 139 crores. The PAT was at 4.63 crores. As on 28th November, the market cap was about 98 crores, and the ROE, ROC numbers are as mentioned on the slides that are visible to you. So the key ratios as we compare, the company performance over the last H1 24 versus the H1 25. We had an increase of revenue from operations of about 17.73%, close to about 18%. That's the on the revenue side. In terms of volume, yes, the figure was even better. It was about close to 21% when it comes to volume growth. When it comes to PAT, we had an increase of about 34% over the last H1 in terms of the absolute numbers. PBT increased by the same by the same percentage. EBITDA was at 20.5%, and the EPS increased by about 13.39%. So some business highlights of the half year, I would say that, we have some leadership strengthening going on where Mr. Kishan Sata has joined us as a key appointment. And I would just brief him about in the later slides. There are some major milestone in international projects as well as the domestic projects where one of the key, achievement was, supplying lubricants to the BRO for the project Dantak, which is the Indian Army or the Border Road Organization project, but in Bhutan. At the same time, in the international markets, we also started operations. I mean, now we appointed distributors in regions like Peru. And we also had the license to operate in Sri Lanka, and we have commenced operation in Sri Lanka as well. The company is also trying to expand into the transformer oil business, and we have a key refinery in terms of sourcing established this year for the supply of transformer oils. Vendor registration, yes, we have successfully done with Western Railways. The vendor registration is in process for the Indian Air Force as well. And we foresee a good number of vendor registrations in the government space in the coming months. There are some business breakthroughs that we have had in the past 6 months, and one of them was a global leader of concrete pump manufacturing called as Putzmeister. And we are also supplying oils for the first fill for the concrete pumps. Yes, we had a Daimler approval, which is one of the prestigious approval that we have had for our product, which is the Mercedes-Benz. Some of you might not know Daimler, but yes, now Mercedes-Benz trucks and buses division is rebranded as Daimler. And we got 10W40 and 15W40, two of our grades approved by Mercedes-Benz. And we are one of the first companies in India to get this product approval. When it comes to the expansion in terms of the infrastructure initiatives, so basically this year our expansion plan is to put up additional space for research and development and laboratory facilities. So over the 2000 square feet approximately space that we have right now, the company plans an additional 900 to 1000 square feet of additional storage and some key equipments which we have been missing so far to put up in our arsenal. The company also has basically an ISO 17025 accredited lab. And we also think of, enlisting these new equipment and new testing facilities to be covered under the scope of NABL. When it comes to some active projects that we have been doing or different new product expansion, the team, our R&D team, has been constantly striving to drive towards innovation and focus on products which are into some niche as well as mass market, but trying to go up the ladder when it comes to satisfying the customer requirements and getting a better margins out of the products that we supply. So some key initiatives that are mentioned on this slide is the peelable type rust preventives that we are developing with a customer called as Bajaj Auto, and they have some specific requirements which we are working for them. Yes, we are developing rust protectors for submersible pump, and in future we also plan to take the toxicity approval for the same, because this goes into the submersible pump and the water industry. Yes, we are also focusing on some esters which would be required for refrigeration compressors. Basically, now the industry is moving towards sustainability, biodegradability, and to achieve these kind of goals for our customers as well as us, we are focusing on these type of lubricants. Also, the company strives to go into some backward integration where we also strive to make certain esters and amides and in-house to bring down our cost of production as well as to explore the booming biodegradable industry in India. There are wire drawing fluids that we are focusing on, and since the wire drawing industry, the cable industry has been doing particularly well in India, we also would want to focus on development of certain fluids for these products. We have a certain line of products already available, but yes, we are expanding a big portfolio in the wire drawing segment as well. So a key recognition that we got this last month is about we were listed by Industry Outlook magazine as one of the top 10 metalworking fluids manufacturers over and above the likes of BPCL or Castrol. So metalworking being one of our strong forte, and our team is constantly driving to make our products better and launch new and new products in the metalworking segment. Yes, in brief about the company, many of you might already know, but just to take you through a glance. Yes, we are APL proudly serves a various network and various sectors with a robust 300 plus dealer distributor network pan India as well as abroad, and we are exporting to countries which are probably not thought of. Like for instance, we are exporting to even Caribbean countries, which is in the Latin and the central part of America, and one of our key export customers is from the Central American markets. So the company has been constantly participating in exhibitions to expand its geographical reach. The last few ones being Apex, which was in USA, that was in the month of October. And last this month, just we have come down from Auto Mechanica in Dubai, where we see a lot of companies who are producers of lubricants participate, since UAE and Dubai being the hub of lubricants. So these are the vision and mission of the company, and we aspire to establish a global presence as a recognized leader in superior quality lubricants. So this is basically the vision, and we also aim to also do the backward integration. And our projects, as mentioned in the previous slides, are I mean stressing on the vision that we carry within the organization. Yes, in terms of mission is to dedicate our resources to manufacture and deliver these exceptional quality lubricants, and technology being one of the forefront of our product lines. So we have a dedicated team who really focuses on the pre and the after sales. That's called as our technical services team, and they basically go into the market. They look for specific applications which the customer is struggling with, and we aim to give them solutions for it. So that's how we have built our brand, and that's how we'll continue to do so in the coming future. A brief timeline about the company: when we started operations, when we were transitioned into a public limited, and what were the key achievements that we did. So all the two factories with the third unit also operational in 2022. Now in 23 we got the ISO 17025 accreditation, and we have got reputed contracts from companies like BML and BHEL. So we got about a 25 crore order from BHEL for a period of 2 years in the last tender that they floated. So about the lubricant market of India, it's close to about 3,000 kilotons approximately, and year on year it grows at about 4%. We command a very small share of this market, which is about 0.8%. So there is enough room for us to grow in the future and enough applications which we aim to satisfy in the future. We have a significant market share in the metalworking space, which being our forte, we have a 3.6% market share, and we're aiming to grow this also close to about 5% in the coming year. So about the manufacturing capacities, yes, we do produce 48,000 KL. We have the capacity to produce 48,000 KL per annum with in-house storage capacity for base oil, that is our raw material, up to 2,000 KL, finished goods up to 1,000 KL. We have a network of warehouses across India. We have about 10 warehouses across India from where we service our customers, and the joint capacity of these warehouses is also close to about 700 KL. All our raw materials, tanks are equipped with automation, SCADA system, and all our reactors are designed separately for different products. So, in brief, we have the required capacities and the required infrastructure to produce the high quality lubricants. When it comes to the lab, yes, we have a lot of test equipments already. I mentioned to you before, and this year we have to integrate advanced instruments like FTIR, ICP, and an as value detector, and many more of them. So this will also help us to strengthen our quality assurance and quality control process. Some of our achievements and certifications, as you can see, we have all the three ISOs, apart from the lab one, that's ISO 17025. We have Volvo, Daimler, Renault, Mac approvals. We have approvals from American Petroleum Institute, which is one of the key, requirements when you are exporting to markets like US and Canada. In terms of the product range, industrial oil being the highest in our portfolio, followed by automotive oils and greases and specialty products. So, just to brief the people out here, what kind of products we are talking about when it comes to industrial, there are different types of applications and spanning all diverse industry base. So, be it cement, be it auto, be it engineering, be it pharma, be it chemical, any kind of industrial applications would require lubricants, and we service most of these applications. Automotive, yes, we have the entire range of product lines which are required for your vehicles, for anything that may come in the future. Uh, we do private labeling for companies like Shell, Varroc, Endurance, Mahindra First Choice. So the oils that they sell typically are manufactured by us. Some of these oils, I would say. Yes, we have a diverse customer base when it comes to government clients. More than 200 plus government companies we have serviced in the past history, and we're exporting to more than about 25 countries, and some of the regions are mentioned here. The industries we serve, as I was mentioning to you before, since we're diversified into a lot of different product range, we don't see a slowdown when it comes to a slowdown in one particular industry, and that's the niche that we want to carry, and that's the idea with which we want to further expand to. So, I mean, right from power generation to packing to infra to railways, dairies, food, etc. I mean, we cover all the applications. Some of our key marquee clientele are mentioned here, and most of these you might know of. ITC is one customer we cracked this year, and we hope for more business in the coming months. So the focus is also on the infra segment, because in India, infra is also going to boom, and it's already booming, and we want to participate in the ride on the trend that is currently on the infra and the government push and the budget allocations that are happening in the infrastructure space. Yes, as I already told you about, we have different locations where we have our own warehouse, our manufacturing operations. We also we are also planning to have a depot in the south. That's a warehouse in the south in this financial year itself. About the management profile, yes, Manan Mehta, I'm joined by my two brothers, Dharman and Vandan, who are again directors of the company. And our first generation, my father and mother are also actively participating in the company operations. Mr. Heman Mehta is the chairman and the managing director, and Mrs. Darshana Mehta, my mother and his wife, is also engaged in the company operation, and she takes care of the government business. So a very new addition since last 3 months to our management is Mr. Kishan Sata, who is our VP operations. He holds a diverse experience in HR, in sales and marketing, in logistics, in operations and team management. At the last the last the designation that he was having and the last company that he was working was with director of HR at Flipkart. So that's he brings in a lot of value to our company, and streamlining all our processes is what we are looking at. So the total 139 crores we did in the last 6 months, we can attribute it to local and the export markets as 116 and 22 respectively. So exports is definitely going to be on our agenda and expansion initiatives. And we foresee good revenue coming from the export markets also in the coming future. Domestic, yes, India is poised to be the manufacturing hub for most of the industries in the coming future. And that's also looked at it. I mean, India is being looked at it very favorably by the global companies to invest. And we would definitely want to participate in the coming years where manufacturing is going to be key in India and lubricants is going to be demanded heavily in India. So some key snapshots of the PNL over the last HY, and yes, what are the percentages that we've increased over the last year? So most of these are available on our website as well as on the NSE platform, and you can always revisit them if you need to. Some key figures of the balance sheet. So one key highlight is that we have reduced our long-term borrowings, and it's almost at the negligible level. By next year, mid-year, we should be almost having nil long-term borrowings when it comes to the term loans and everything. So yes, we have deleveraged our balance sheet also, and the significantly the debt has also come down a little bit. Most of our cash flows have gone positive this half HY, and we foresee that I mean the strategy for growth vis-a-vis cash flow management has worked for us, and now we are focusing on better cash flow management in the coming future. So yes, in short, your company has increased sales, increased the EBITDA, increased the PAT, increased and deleveraged the balance sheet, reduce the debt, and with this particular vision, we aim to strive more and give more to our investors and participate in the company's growth story in the future. Thank you very much. I'm happy to take any questions that you may have.
Thank you so much, sir. We will now begin the question and answer session. Please raise your hands to ask your question. We'll take the first question from Mr. Smith.
Hi Mananji, how are you?
Hi, all well. How about you?
All well, all well. Thank you so much for giving a wonderful rundown. I'd like to start with asking a very generic question, right? So when we talk about the entire industry in volume terms growing by 4%, so does it mean that for us to grow at a faster rate, we would be snatching or we would be capturing the market share of other players, or is it like does it also mean that there are other buckets in the entire industry which is growing at a faster rate, and our focus in terms of product mix is going to be towards that? Like, what is going to be our strategy?
Yeah, sure. So basically, you're right. Yes, when it comes to expanding faster as compared to peers, we would be having to grab some market share from our peers also. But here we are just talking about the Indian market, and in particular, the Indian lubricants market, which is growing at about 4%. I mean, our company not just aims to increase its market share in India, but we also plan to expand globally. So yes, there will be revenues which would be coming from different geographies and which would also be attributed to the growth percentage when it comes to increasing our market share in India as well as abroad. Yes, there are certain niches which in the holistic at the holistic level they are not covered as a part of the lubricant sales or the lubricants total generic demand. So these niches also add to the total volume. And somewhere, backward integration for certain product lines would also help us to expand not just lubricants, but also service certain other lubricant manufacturers for their own raw materials. So that is also going to be the future. For instance, we are setting up a office in Dubai, in UAE. So the objective is to you supply the raw materials or the additives, as we call them, for the Dubai lubricant manufacturers to produce certain items. So it is not just lubricant as a totality, but yes, going on the backward in terms of the value chain also, and giving them those products which are required for them. So we are trying to edge over competition in that fashion.
So basically, what we're saying is backward integration along with expansion into different geographies and focusing on certain niches would allow us to grow faster than what the competition or what the industry itself is going to be.
Absolutely.
Okay. Second point was again because you said that ours is a R&D heavy company wherein we are wanting to serve niche applications, but that is not reflected in the margins, right? Like our operating margins are sub like single digits, right? Like it's in the single digits. So how is that poised to do once we start scaling up, once we are expanding our R&D footprint and we are going to get backward integrated? How would that move up as we move forward?
Yeah. So as I already mentioned to you before, growth was prioritized over margins in the last few years. And what we have done is that, with certain, volumes, the economies of scale kicks in. So now we are at those volumes where the economics of scales have kicked in and where we, foresee that, the cost of production will go down. Uh, Besides, when we go to industrial customer, when I visit an industrial customer, the first thing that they ask is, to enter with a product for which it's like for them they don't have to take a trial, for them they don't have to really bother about technicalities. It is just to give a price and you enter a company, and then gradually you move up the ladder, products which are sensitive for them, critical for them. That is what you get for trials, and that is what you get for approvals. So the focus is more on establishing our presence across in the entire industry, and then moving up the ladders, and going to value added products and giving them the applications and the reasons what we can, why would they pay us extra for it.
Fair enough. Okay. So solving like niche applications, and as the relation grows older, that is the key for us to expand our margins. Just my last question, right, and then probably again and get back in the queue. Is that there was like I was going through the annual report, and in terms of I was going through the debtor aging report. We have debtors above 4 crores, which have been older than 180 days, right? So are these bad debts, or like what sort of, or like why is it such a high figure? In the balance sheet that we have.
Yeah, so definitely when it comes to servicing the industry at large, we come across certain accounts which do not perform as per our expectations. So yes, there are a lot of these people who don't pay up on time. For instance, companies like even Kalyani Forge or Kalyani Techno Forge, they pay up even after 180 days. So there I'm not saying there could not be bad debts in the coming future, but the scale of bad debts would be low, very low. And at the same time, yes, the our we have our credit collection team which constantly engages with the client to recover the payment on times. So last year, I think textile industry was also not doing very well. So we had a lot of I would say that payment delays from textile industries also, which also could be attributed, to the higher debtors that are being reflected in in this. At the same time, we have a debtors insurance where most of our debtors are covered in case they don't pay up. So that's also going to possibly, help us in terms of any bad debts that may arise.
Okay, so this 4 crores is not a bad debts figure. It's more of like customers not paying up on time. But you're assuming that this is like considered as good at this point, right?
Yes, sure.
Oh, thank you so much. I'll get back in the queue. Thanks.
I will take the next question from Varun Agarwal.
Yeah, thanks for the opportunity. Great presentation, Mananji. So
Thank you
we
very much.
are already in the mid of December. Compared to H1, how do you see the demand scenario this quarter? Is it better than the first half?
In terms of the demand scenario, October was good, I would say. November has not been that great. December again, it has bounced back, and we foresee that December is going to be better than before. than last year as well. And the next quarter, yes, Jan, Feb, March are something that is going to be key for us, as well as it is key for the industry also. And most of the times, I mean, historically, Jan, Feb, March have been great for everybody. So we see demand, picking up. Yes, there has been a challenge in certain sectors when it comes to payments and the realization of payments not on time, which Smith and we already spoke about.
Right.
So yes, I mean we see the demand going to be picked up again. I mean December has picked up again. November was a little bit slow, and moving forward, we are very optimistic about the next quarter or the last quarter of the financial year.
So keeping this optimism about Q4 in mind, what is the revenue we can expect this year? Just a
So
range would be fine, not an exact number.
Uh, maybe I would not be able to put an exact number, but yes, we would say that we would be growing over last year H2 also, and I mean I would not be able to predict a number for now or give a number in this forum as of now, but
Right.
yes, we see robust demand in the coming future and some sales already planned for December and January as well. So there are our basically our target is to grow at about 20-25% CAGR over the next 3 years, and we think we should be able to achieve that easily.
Okay. And how are the raw material prices behaving? Are they impacting our margins or not impacting?
So, along with the weaker demand, the prices have fallen this quarter, and that could also help us in strengthening a little bit on our margins because it is cyclical.
Okay.
And as you know that whenever the prices fall, we get a little bit of time to pass on these fall in prices to our customers. So and it looks like till the end of March, the prices are going to be stable or at these levels or may go down, but we don't see any prices which is going to come up unless and until there is geopolitically any kind of adverse things that may happen, which these days happen very frequently. So can't really predict that, but yes, to be honest, I mean it will be lower than as compared to in the first 6 months.
Got it. And with respect to our senior leader, which has joined recently, Mr. Kishan Sata. So I just
Yeah.
saw his profile, which you had discussed. He's from Flipkart from HR. So would
Yeah.
adding, I mean, what is the rationale behind adding him rather and in comparison to somebody from maybe a larger
So
petroleum
yeah,
company?
so his last assignment was, he was at Flipkart as a director HR. But
Right.
if you see his profile very keenly, he started with sales and marketing in Reckitt and Benckiser. So he has the on-ground field experience, on-ground understanding about the products, how we sell to distributors, what is the distributor mentality in general.
Okay.
From there, he moved to Reliance Retail, and where he oversaw the operations and the logistics, all the warehousing of Reliance Retail, all the operations, just-in-time inventory, control on the inventory, better cash flows. So, these things is what he saw in Reliance Retail. From there, he moved to logistics in Flipkart, and then he was upgraded to director HR. So from there, he moved to HR. So he has a broad spectrum of his during his tenure at various companies, which is heavily useful for us when it comes to streamlining a lot of processes, having benchmarks against competition, better efficient credit collection. That's what. So he's overseeing most of the operational aspects and leaving us a fair amount of time for business development. So with this idea, we've got him here to oversee the factory and entire operations on a larger scale. And the petty issues can be handled by him, and we get time for business development. So that's the reasonal and the rationale for getting him on board.
Got it. Got it. One last question. Any new product launches are we planning in the coming months, which are value-added products per se?
Yeah. So in terms of automotive, Zinc 40 and Roar 40 are two products which have been already planned for launches, in one in this month and one in the coming month. And these are premium products with ester technology. And I mean, why we want to develop esters is also because of the better uh, friction modification that it gives to these kind of products, and ultimately better mileage in the for the vehicles. So in the automotive space, these two products have been lined up for the next 2 months. At the same time, in industrial space, we are developing. We have already developed two products which we are planning to introduce in the again in the metalworking segment. One is a low-cost semi-synthetic, which we are planning to promote, which is classic at C60, and one is on the high end, which is basically suitable for all kind of applications, all kind of metals, and for high speed machining also. And that will be also showcased in our MTEX exhibition that we'll be participating in Bangalore in the coming month. That's in January. And there are two, three more products in pipeline, which are called as spin finish, again ester based oils. So these are mostly for the textile industry, but then again niche, and most of these products we are trying to develop as an import substitute and not as a local substitute. So there are products which are coming from Germany and Japan in the textile industry, which we aim to replace in the coming future.
Got it. Thank you so much, and wish you all the best for the rest of the year.
Thank you.
Do we have any other question? Yes, Mr. Smith.
Okay, in case there's no one else, I had like a couple of more questions. One is regarding the a point that you mentioned, right, about raw materials. So when you say that, okay, if the prices are falling down, we have like a certain buffer before which we have to pass it on to customers. I'm assuming that works the other way around as well, right? So if suppose the prices go up and like you said, geopolitical things are happening with the new government also coming in the US. If suppose the prices shoot up, is there a chances of margin squeezing, or we are able to extract the like we are able to pass on the price like the higher prices to our customers as well? Like how does it work?
So, I mean, to address this question properly, I will have to go in a little bit of deeper detail. So we have two main verticals, I would say industrial and automotive, and I would like to brief you about how it works. So when it comes to automotive, the price increases, by the leader of the industry. For instance, Castrol goes for the price increase for the first time, and everybody follows suit, because it is difficult for us to justify with the price increase at the first instance. But if Castrol has announced the price increase, then everybody joins the line. So then nobody questions about it. So once the price increase happens in the automotive space, we don't see a price decrease which happens for the customer. Yes, trade can see a little bit of price increase or decrease, whatever may happen, maybe to the tune of 3-4% here there when it comes to tweaking certain schemes. But for the customer, you might not have seen for yourself also. If you go to buy your own uh, engine oil for your own vehicle, you might not have seen a price decrease in the last 10 years also. So for customer, it never happens in the automotive space. When it comes to industrial, it behaves a little differently. So most of the key accounts or the direct customers, what we have, they work on quarterly price mechanism. So for instance, when we see the price decrease, which is happening in the quarter, and we obviously when it comes to, so today, if I've booked a material which is going to arrive in January or February, I know that my price in January and February is going to be this. And I know the prices is going to be either increased or decreased. So accordingly, we try to, plan our raw material inventory also in that way, where we don't have to really, if it's a price increase, we don't stock we stock more. And if there is a price decrease, we don't stock too much. So then spot buying becomes our strategy. And at spot buying, when there is a price decrease, you get the benefit of, lower price every day. So that's how the strategy works when it comes to certain industrial customers. So, and when it comes to our distributors who are in industrial space, we pass on the price increase or decrease every month. So that's in a way we are not affected by the price increase or decrease when it comes to at least 70% of our business, I would say.
Fair enough. And like the larger, player in the automotive space, right? Is their strategy to, reserve or because capacity is much more than ours, right? So Castrol, like if let's say the prices are going down, would they hold inventory at this point, or even they work on a just-in-time inventory, like for raw materials, just-in-time inventory kind of a model, and they also don't like playing around with the raw material prices. Like they also keep hedging their prices. Is that what we are
No.
saying?
So typically they don't hedge too much like we do. I mean, for instance, we would go to even 60% of our inventory level at one point of time when it comes to raw materials, typically. But then I would say that we would not go, Castrol would not go to that level. They have a buffer of 10-15%. That's what they normally carry in terms of inventory in the total value chain. Because for them, it is very difficult to control the entire supply. I would say that, have a lower stock. And for us, we are more approachable. For instance, Castrol is not very approachable. If there is an issue in terms of a product not available, then their customers would not really tend to wait. But then when it comes to our ears that so and so product is not available, we are more agile and flexible. So Castrol would not follow that approach, but yes, people like us who are on the lower scale would follow that more on that approach.
Okay, fair enough. And like you pointed out that, we have two verticals, automotive and industrial. So automotives, I mean, this is probably a question that you keep getting asked, and you've been asked at like other forums as well. Once EV kicks in, or once EV penetration goes deeper, and like this vertical, probably the demand tailwind won't be as strong as it has been in the past. What segment do you see shouldering the loss, right? Because ultimately, you are a young team, dynamic team. You would want to be in an industry which is growing. So once EV kicks, like penetration kicks in, what is the substitute, or how do you see the market evolving then?
True. So for instance, EV, when we talk about the penetration in India, in terms of cars, if we talk about, for instance, so India is still at about 250 cars per thousand people, whereas the globally the number is close to about 900 plus in China and 800 plus in the US. So India is still a long way to go when it comes to, cars per number of people. So yes, EV definitely would come in. That would impact the total lubricant consumption, but it would take its own sweet time. So we are talking about, the car having a lifespan of about 15 years, and the 15 years the car would be using, the ICE cars would be using those engines. At the same time, EV does not completely come without lubricants. So, for instance, if a normal IC engine, they use about 5 liters of lubricant for a certain drain interval. EV would use still a brake fluid. The EV would still use a gear oil, would a transmission oil, and they would still use a coolant. So that would be close to about 25% of the total consumption what we have on the ICE. So lubricants will still be required, but it will be one-fourth of the requirement that would be there when it comes to a normal vehicle. So with the kind of park that we have in India, the kind of growth that we see in the two-wheelers and the four-wheeler numbers that is going to take place in the future, and the lifespan of these vehicles, we definitely see that EV will impact, but it will not impact at least not before 2035 or not before 2040. That's what the assumption is. At the same time, the CV and the heavy commercial vehicle segment, when you talk about the off-highway equipments, is still very small in India. Infrastructure is just going to start, peaking up and going to expand from every side. And the off-highway equipments have the maximum consumption of lubricants when it comes to any kind of lubricant. So yes, definitely off-highway is something which we are forcing. So we are also looking at certain more grades of approval from BEML, and the visit has been planned for this month, where BML officials are going to come to us. So the coal fields, the mining areas, these kind of applications, infrastructure would still be using off-highway equipment, which would still be requiring lubricants, and that would be one of the focus, and that would be one of the verticals which will shoulder the effect of EV penetration when it comes to India. So government target is also 30% till 2030. So which looks definitely very, I would say, optimistic. At the same time, that is the automotive side. Industrial is also something which is going to grow phenomenally in India. We being very strong in the metalworking space, engineering, steel, defense, I mean, mining, the equipment manufacturing, pump manufacturing. These are industries which are going to grow, and we foresee a lot of lubricant consumption also, which will happen from the industrial space. So in totality, I don't see any kind of demand which is going to go down for us when we were having such a diverse customer base as well as product lines.
Fair enough. And like just my last question, right? You said that, I mean, our company's vision is to grow by 20-25% compounded for the next 3 years. I'm assuming that is in the top line level, right? So, in terms of the margins, can we see the margins also moving up in, let's say, double digits in the subsequent 3 years, or you feel okay because it's a crude based business that we are in, there is a limit to how much margin we can squeeze, right? How does that work?
Yeah, we are optimistic on the margins also that it will increase with every year. I would not be able to put a number to it, but then yes, I mean it would be in line with the sales growth that we have, and with the growth in sales, as I mentioned to you, economies of scales kicks in. We have direct sourcing from a lot of refineries in India and abroad, so that also helps in to bring down the the cost of the product. Definitely we see that we will be able to retain and better off our margins in the coming futures. And the focus on development of research-based products, development-based products, where they will also help us to really bring down our cost.
Okay. Is there any limit to how much refining margins can a lubricant company have, or it is open-ended? I mean, जितना अच्छा research है उतना ज़्यादा अच्छा margins आप squeeze कर सकते
In fact, I would say that Castrol ka is research is very, very minuscule, because most of these automotive formulations are available online. Even if
Correct.
you want to make a engine oil by yourself, you
Hmm.
can Google it and take some products, additives here there, and you can make it for yourself. So it is very easy to make an engine oil per se when it comes to when you compare it with an industrial lubricant. So still Castrol is able to garner such kind of margins. When it
Hmm.
comes to industrial products, the margin can be anything. I mean, if you solve a customer's problem and if you
Hmm.
eliminate an entire process, like he's doing a process of, the entire application, I mean, the entire steel, I would say, for instance, a steel roll going into a rust preventive oil-based product, then washing it, and then, further there is some plating on it. If you eliminate entire process from, and if you have a product which can solve his problem, and you can command a margin of about 100% also. So it's very, very typical to the product.
So our focus is on the latter, like solving, being R&D heavy. And are we recruiting people for that, or the idea is to probably first scale up sales and then move towards hiring more
No,
technical?
so I would say the scale up of sales has already happened over the last few years, and obviously we will be continuing to grow in the coming years. But then yes, now the focus is more on making products which are focused on solving the problems, as well as research heavy products. And that is the reason we have recruited a few people. Yes, some we may not be able to afford at this instance. So we are taking consultancy services from certain doctorates and all who help us, in formulating these kind of products. So as if you might have possibly seen in the presentation, so I and Vandan, my brother, we both are also from a technical background. We are
Correct.
both chemical engineers, so we understand a bit of chemistry. We understand how products work. We visit customers. We see their pain points, and we also assist our R&D team. Let's work it this way and not this way. So our focus is also there on the research and development part. And we have consultants, like two consultants we onboarded this year, one for industrial and one for automotive, specifically to make certain product lines which we don't have a know-how.
Okay, superb. I think happy to be a part of the journey. Just one request, if we can keep this more frequently, right? Like the calls or investor communication, I think it'll be easier also for us to understand what the plans are. I'm assuming this is the first time probably we are having the call. So if suppose we can keep this recurring every quarter, every 6 months, I think it'll be better for us as well to be a part of the entire journey.
Yeah, definitely it makes sense. And I would also possibly speak to our IR team and have this interaction more often. Maybe at a, I would say, professional level or at a personal level, we can always discuss. But we are really here to answer any of your queries that may arise.
No, no, 100%. Thank you so much. Thanks. Bye.
Okay, now I would like to hand over the conference to Mr. Manan Mehta for the closing comments.
Yeah, thanks, Siddhi. So, thank you very much, everyone, for joining for this first earnings call that that we have for your company. And although since this being our first earnings call, we may have missed or we may have faltered somewhere. So I apologize for that. And if there is some improvement that you would want to do us from our side, do write to us. My Your communication can be marked on to our IR team, Siddhi and Abhishek and the entire team. And feel free to reach out to us for any of your queries. Thank you once again for joining us and looking forward to be associated with you in this journey of APL.
On behalf of Arabian Petroleum Limited, I thank you all for joining us, and you may now disconnect from the meeting. Thank you.
Thank you.